I do want to start on Chair Gensler's comments you just heard about Bitcoin ETFs, and then Vanguard saying, look, these ETFs, they don't align with a balanced portfolio. They're just not going to allow it. Do you have any of those same fears around investor protection?
We don't. I mean, we always want to ensure that whatever we're offering our customers is suitable. But I think they've made it very clear that they think this. There's a segment of our customers that feel that this is an important technology and asset class that has a future. And as a result, they want it to be a portion of their portfolio. And they've expressed that. Yes.
Oh, sorry to cut you off, Steve. This is maybe more of a philosophical question, but do you think there's a time and a place for a brokerage firm to step in? Is it ever a point, or is there a role of a brokerage firm to come in and say at some point, hey, this might be too risky, we're just not going to allow it? Would you guys ever do that?
Well, I think if something is not suitable for a person, we will make that determination, and they will make that determination. But I think our place largely is as a self-directed platform for investors is to provide them the choice to make the investment decisions that they choose to do, provided that they are suitable to them. It's their money after all, so I think they have the latitude to make those decisions, assuming that it's a suitable investment.
And Steve, what does demand look like so far? Can you share any of the statistics you're seeing around these ETF flows so far?
It's been really interesting and kind of exciting. And look, the approval of these is, I think, very beneficial for not only retail customers and traders, but also for the industry as a whole. If I could generalize what our customer base looks like, a third of the people are very passionate and very invested in crypto, whether directly or through ETFs. A third are curious, and they continue to dabble in crypto, some portion of their portfolio. And a third are probably they might not have a portion of their portfolio in this. So what this does for our customers is gives them an avenue to be able to do it in a way that they're more comfortable with, an exchange-traded product in an ETF format, something that, these are the most popular instruments in the world, trading and investing instruments in the world. So it gives them some comfort, and they can do it in a very cost-efficient manner, which is exactly what they're looking for. And so from a behavioral standpoint, here's what we saw. A third of the people that participated in buying one of these 11 new ETFs actually sold some equity. So basically what they did is rebalance their portfolio. 20% of these purchases or sales happen in a retirement account. And we think that's quite interesting. And finally, the other thing that was quite interesting was GBTC, the grayscale one, it was a net sell across Robinhood, both in retirement and self-directed. And what those people did was rolled into one of the other ones. And I believe that was just a direct result of just trying to be more cost efficient, because from an overall cost standpoint, the other 10 are probably much more cost efficient, and they have a better tracking record.